Good morning and happy Saturday, everyone out there. Hope you had a fantastic week. I may have a little bit of an echo chamber here, but this is Mornings with Michael, Saturday edition, the weekend review. This broadcast is intended for educational and entertainment purposes only. So if you have any questions about your portfolio, financial services, or anything of that nature, you can call me or text me at 415-828-7997. So without further ado, let me share the screen. I made a special PowerPoint presentation as well to kind of go over the indexes, how they kind of finished the week, and then go over some political notes as well, and then I'll switch over to MarketSmith and go over, we can look at how things on the last hour kind of traded, as we lost a lot of energy in the last hour of trading. So let's take a look here. Take a look at this PowerPoint. I'm going to stop the share and start it all over again. So the most troubling part about the GDP report is the precipitous drop in real disposable income, which fell over $1 trillion in 2022. For context, this is the second largest percentage drop in real disposable income ever, behind only 1932 for the worst year of the Great Depression. So even though it went up 2.9% in the fourth quarter, when you really look in under the numbers, it doesn't look as good as it should. So I want to take a look at the NASDAQ, how the NASDAQ is faring. And just take a look. There's a number of days up in a row. 1, 2, 3, 4, 5, 6. And this one closed down. So even though it's bullish engulfing, it didn't close in the best areas. And it's 1, 2, 3, 4, 5, 6. And in trading technology, we call this a stale green light. And that usually even though volume went up on Friday, this often leads to a red indicator right here. And if you look closely over here, there's a gap in the market, and most indexes gaps are likely to fill. 80% they fill, and then they sometimes return to the trend. So the trend is up. So it's a possibility that this fills and then it returns, trying to head higher. We'll just have to wait and see. And then if you look over here, the stochastics, there's a divergence here. If you go over, there's a lower high over here. And you got the same thing on the commodity channel index. You got a lower high here. So this is a divergence, and a lot of times the markets will head lower. So let's look at the small cap. Small cap's got a similar indicator here. 1, 2, 3, 4, 5 out of 6 days in a row up. We're meeting resistance from prior high here. Looks like we got a spinning top the day before, and then we got a little bullish candle, but it didn't finish at the top. So it's a possibility that this can continue on Monday, but later in the week, I think there's going to be a pullback. Once again, we got a lower high on the stochastics and the lower high in the CCI. So it looks like it's starting to run out of steam. Next, we got the S&P 500. It's moving higher here, as I said earlier in the week, 410 has been the resistance level before, where it's pulled back. Unlike the NASDAQ and the small caps, we got lower volume on the S&P, and we got a hinging handle here. We got a hinging handle here, hinging on the stochastics and hinging on the CCI. So it's a possibility that we may go up Monday and Tuesday, and then I think we're going to have a pullback. And then if you really look here, the markets don't like to have such a big gap in between the moving average and the highs. So it usually likes to snap back here, and that's what we're looking for next week. Next, we move on to the VIX. The VIX is trading down, very low line. It looks like it's getting to the bottom of its channel here. And the VIX is oppositely correlated to the S&P 500. So I think there's a good chance that this is going to snap up to the 20 or 21 area as the S&P pulls back. Now on to some political headlines. UAE continues their de-dollarization as, and they say crypto will play a major role in trade going forward, that and gold. So people are trying to move away from the dollar. So the petrodollar is in danger here. Now, Biden said he's sending tanks to the Ukraine and says this shouldn't be an offensive threat to Russia, as Ukraine praises international tank coalition. Will this draw the rest of Europe into a World War III type of event? This is a big question on everybody's mind. The Ukraine set sights on fighter jets after securing tank supplies. Another news item that makes you wonder where this is going to end. Central banks need gold because they may be preparing for an unprecedented period of monetary devastation. That's pretty strong words. Global gold reserve holdings are increasing. Look at this rising channel here. We got a little pullback here, and now it's like it's heading back up. Now this is U.S. personal consumption expenditures, chain type price index, personal consumption. Because of core prices have, in inflation, have headed up. This is a huge spike up. Where are all these consumers going to be able to continue to spend and prop up our income? That's a big question. And now if you look over here, look at the wages. Wages are dropping at a significant level. But inflation hasn't been dropping at the same rate. It has been dropping a little bit, but we'll have to take a closer look at that. National average gas prices have headed up about 12%. So pump prices surge as gasoline demand rises. And I said earlier that as China comes back on board, a lot of people feel that oil prices would be starting to head up. Inflation drivers. Food and energy prices continue to drive the global inflation surge. Now, a lot of people thought that this would pull back, but this sure doesn't look like a pullback to me. The Federal Reserve still has a lot of work to do. Food, non-alcoholic beverages is here in orange. Housing, water, electricity, gas, and other fuels is here in blue. and transport is here in black. And look at this other column. That is just amazing. So that's our report on behind the scenes. Let's go take a look at some of the indexes. Lyft got a nice upgrade last week. One of the analysts covering it said they were getting their debt in order. So that now has trended above its 200-day moving average. Let's look at the 0T and TNX. 10-year yield. Now I know a lot of my friends have been talking about how yield has come down quite a bit. That's nice move down, but last 2 days, yield has been popping up. Is up a little less than 1% today. Let's take a look at the TBT 20-year yield. As you can see, it's very similar channel. It's 10-year. Trend has been going down, which is good for stocks, and I guess that's why our stocks have had a little bit of a rally. But once again, we got a 2-day upturn. You know, it's much less. It's less than 0.5% increase. Take a look at the QQQ, the Nasdaq. The Nasdaq did pop up. Let's take a look at the 10-minute bar. The last just couldn't hold that. Had a nice jump up for the day, but then popped down on the last 20 minutes of trading. Let's look at the IWM, small caps. Small caps continue their impressive run. We'll just have to see if, like I said in the previous chart, this is where resistance is going to be. And volume was beneath the 50-day moving average, so that's not a good sign. Let's take a look at the Dow Jones Industrial Average, and it was up slightly, but let's look at the 10-minute bar and look at this. That's not a good sign. That was a pretty miserable close, the Dow Jones Industrial. And look at those bars, huge volume. Let's look at the oil pricing. Oil pricing had a big pullback on Friday, down about 2%. So I guess that's good for gas prices moving forward. We'll just see if it can maintain that. Natural gas pricing jumped about 2% on Friday. I guess one of the natural gas refiners had come back online after making repairs. So I'm not sure if this is causing price increasing. Miners and metals got a slight pullback, less than 0.5% Friday. Our technology and software had a little bit of a pullback. Building materials holding steady. Transportation index moving up slightly, so that looks okay, but volume is really dropped off to a dreadful level. see, take a look at consumer discretionary. It's heading up. Look at the financials, trending higher. Let's take a look at some movers that have been moving up. As you can see, Shopify. Guess you could put them in software. Nice trend up here. Got over their 200-day moving average, so it's above all moving averages, up into the blue buy zone. Take a look at Tesla. Tesla has really popped up here. It's moved up quite a bit in the bottom. So it's moved up from 101. So it's about 75% up from the bottom. That's a huge move. Now, can it continue? That's a big question. It could be viewed as another stale green light. 1, 2, 3, 4, 5, 6 days up in a row. So it's definitely due for a pullback. So this is the S&P 500 equal weight with all the heavy weights of the big tech and Tesla. Still trending up. So we'll continue to watch that as well. What are some of the issues that did well on Friday? Let's take a look at up in volume. My homes continues to roar higher. Technoglass, CUSA glass for commercial and residential buildings. Tesla, which we just looked at. Saia and Old Dominion Freight Line. They continue, these are the 2 leaders in transportation index. SLM, loans to students. American Homes, another home builder. Harion Networks is one of the best networking companies. You can see it's made a huge move after a short consolidation. Earnings are due in 12 days, and I would think there would be some sort of pullback as it stretches above the 50-day moving average here quite a bit. Another semiconductor stock that is doing well, European, but you do have to see that there's this gap here. Will it come back to fill that gap, or will it keep going up? That's a question. But relative strength against the S&P 500, here's the S&P 500, is 94 out of 99. As a blue dot, this means that it's made a new high against the S&P 500. So it's leading the charge. It just had a 61% earnings increase. And look at the blue volume. It's got a lot of professional buying here. We've got Sterling Infrastructure. Let's look at a couple more here. Applied Industrial Tech. Driven Brands. Floor and decor as it helps building remodeling. So you kind of get the picture there. So that's a report for looking back at the week. I think there's going to be a pullback next week. It might be Tuesday, it might be Wednesday, but at some point there's going to be a pullback. A lot of people think that the market's going to be negative for the year. Some Vanguard predicted a 0.25% return. Said bonds are going to be leading stocks again this year. So we'll just have to wait and see. But I think there's going to be a pullback in February, and we'll just have to wait until, I believe it's February 1st that the Federal Reserve comes out with their report, and then there's going to be another report on inflation and purchasing coming out here shortly. So we'll take a look at that next week and see how those reports come out. But in the meantime, hope you have a great weekend. Remember, keep reaching for your goals. Keep coming up with new activities that'll help you reach those goals. And if you have any questions about your portfolio or anything about financial planning, please give us a call. My number is 415-828-7997. This has been for educational and entertainment purposes only. And thanks for tuning in with Mornings with Michael. Have a great day and enjoy your weekend.